So today we have with us ourselves a distinguished professional and speaker, A. Parthasarathy sir with us today. Sir, request you to occupy the chairs. Yeah, before we begin, I like the members to rise up for the motto song.
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्वैता 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 एतद्वैता.
Thank you. Before we begin, I would like to have a short brief summary of Parthasarathy sir. Parthasarathy sir is a senior chartered accountant with over 30 years of experience in enterprise risk management, technology reviews, performance improvement, and operational audits. A fellow member of ICAI, ICMI, and associate member of ICSI and ICAEW. He also holds credentials as CISA, CIA, and CFE. He has authored several thought-provoking works, including contribution to IAS Global Audit Guides and papers on AI in financial services, data analytics for fraud detection, and risk storytelling. Apart from professional, he is also a very good speaker and faculty. Sir, on behalf of SIRC of ICAI, I welcome you to today's session, sir. I request CA Harish sir to deliver the memento to our speaker as a token of gratitude and respect. Yeah, a round of applause, please. Thank you, sir. Sir, we are looking forward to your engaging sessions today, sir.
Good afternoon. Though I have a presentation, I don't want to refer to the presentation too much. Let's have more a discussion since it is a smaller crowd. I just wanted to probably do a quick round of introduction also. I want to know whether you are practicing, you're working in a company. If so, what is your role in the company? So that it will be more easier to have the conversation. So so maybe we can start with you.
Yeah, I'm a practicing chartered.
Okay, very good. You've been practicing for long?
7 years.
7 years, very good. What do you specialize in?
GST.
GST, okay, very good.
My name is Diamond Jubilee. I am working in the Chennai senior executive. And
Audit practice, tax, or what? Which practice?
I am working in
Statutory. Okay, very good, nice. What about you, sir? You.
My name is Pawan.
Hmm.
Practicing mostly indirect tax.
Indirect tax, okay, very good. Very good. Okay. Audit, statutory audits, okay.
I'm practicing statutory accounting. So I'm specialized valuation and IFC.
Okay, very good.
Yeah, I'm Harish. I'm member since 1992, working in industry.
Industry. What role? You are in the finance, internal audit?
Currently in finance, earlier I was in internal audit. Actually 10 years, last 12 years in India, balance 2 years in abroad.
Okay. So they're also focusing on finance roles.
Actually, started my career in finance accounts. I went abroad for the internal audit 2 years ago.
Oh.
And back to the PQ office here.
Oh, very good.
That's all the back office here.
Nice. We're doing a quick round of introduction, so you can also introduce yourself and then tell what role you're playing. You're practicing, you're working in a company.
I am Usha, chartered accountant. I am working in Manoran Sasma, and I have 12 years experience.
Statutory audit, taxation.
I'm starting. We had all types of things, basically statutory audit, trust work, individual and everything. Now we are in core indirect tax.
Direct taxation. Okay. What about you? Oh, okay. Very good. Fine. So I think the institute has been conducting this series of practical case study oriented topics on various topics. I think last month it was on taxation, in the month of May. Prior to that it was on something else, and so on. So the context was more to talk about fraud and fraud risks that organizations face. So I have few examples and few slides on statistics, but let's go through that as we go along. Again, currently in the context of Indian corporates, over the last couple of years, we are seeing an increasing instances of fraud being identified, fraud being reported. There is a lot of reporting responsibilities on statutory auditors to report fraud in case there is fraud on the company, fraud by the company, exceeding a particular threshold in a particular format that has to be reported to the Ministry of Corporate Affairs and so on. So there are a lot of changes in regulatory requirements in respect to reporting on fraud incidents as well. But that comes later. The reporting comes only later once you identify something or once management identifies something. But as a chartered accountant, depending on the role that we are playing, we can have multiple roles. We can either be working in the finance team of the company, we can be an internal auditor in the company, or we can be a practicing chartered accountant playing the role of a statutory auditor or a service provider in terms of internal audit or taxation service or whatever it is. At any point of time during the role that we are playing, we might end up identifying some incidents of fraud in the organization. So there is obviously a responsibility on us to address that rather than just ignore that and move on. We cannot say it is the role of the statutory auditor to report, so why should I bother? As a professional, if we find something that is not necessarily in compliance to what is expected of the organization, and they want to intentionally either deprive the government of certain revenues, or if there are practices within the organization which is impacting the organization in terms of monetary values in a manner intended to defraud, then our responsibility automatically kicks in. So first and foremost is for us to understand what is fraud. I don't know whether there is a definition of fraud that is there there is a definition of fraud in the Indian Contracts Act, which defines fraud as anything that is not true, concealment, or a promise made without any intention of performing, or any other act fitted to deceive, or any law or omission of as the law specifically declares to be fraudulent. That is what the Indian Contracts Act says. But there are other definitions as well. So the Institute of Internal Auditors also defines fraud. The Certified Fraud Examiner Forum also defines fraud. Companies Act also defines fraud. But the bottom line is anything that is done with an intention to deceive will broadly come under the definition of fraud. So again, there can be an internal fraud or there can be an external fraud. I will probably share the slides, so that will be helpful. We'll also have an end time, though it says 7:30, we can very well complete earlier also. That is not an issue. So there is internal fraud is something that is done by somebody within the organization. External fraud could be something that is done by somebody else outside the organization, causing an impact to the organization. So it could be a supplier whom I am favoring, and that supplier is giving a bribe to somebody to get a contract. giving the bribe to somebody is within the organization. So if that is the case and the company is engaging a vendor who is not supposed to be engaged otherwise, and therefore is paying more or paying for defective service, obviously the company is going to be impacted. So to that extent, it is fraud committed by somebody outside, but it is impacting the organization. There could be fraud within the organization whereby I sign for you and I get wages or whatever it is. So that is also something. Or I make a fraudulent travel statement claim, or it could be any of those claims where I have not traveled but I am claiming, or I am not spent but I am claiming, whatever it is. But somebody is approving, somebody is paying. So at the end of the day, somebody is benefiting within the organization. Or these are all lower level frauds. So if you go up, somebody wants to falsify the accounts, somebody wants to, the investor is pressurizing me to showcase revenues. So I want to book revenue. So I'm asking my accountant to say that please ensure that the revenue is recognized in a manner like what you see in some of the contracts where the contract is not fulfilled, but I'm going ahead and recognizing revenue just to meet the numbers now. But at a later point, I might create a provision, I might write off, all that might happen. But today my pressure is that I have to meet the projections that I have given to the investor and so on. So I have to obviously. So that is something that is at the behest of the promoter itself. So the promoter itself is asking you to sort of falsify the books. So that is probably another type of fraud, but more impactful, I would say. So so those are all various aspects. So again, I don't know, many of you would have seen what is called as the fraud triangle. The fraud triangle is a good definition. Of course, the font size is a little small, so I'll read probably. If you look at any fraud situation and you analyze why it has happened, there are probably 3 dimensions to it. One is there is pressure to commit the fraud. The pressure could be internal, external, like the example that I gave where there is a pressure to falsify the numbers because I have to showcase something to the external guy. Or there is a pressure on me to show my performance, because if I am the head of procurement and I want to show that I am making savings year on year or whatever, or my cost is within the budget or whatever it is, there is pressure on me to perform. So thereby I am motivated to commit a fraud. So that is one aspect. The second aspect is opportunity. What we mean here by opportunity is, there is an opportunity, say if I am doing something, typically we call something as a internal control, checks and balances, maker, checker, whatever. So if I am doing something, somebody else is verifying. So because somebody is actually verifying, I will be morally a little afraid to do something. But if the person who is approving and if I are both hand in glove with regard to this, there is an opportunity for me. So if I am preparing a bank reconciliation, somebody is reviewing, whereas I have already siphoned out funds, or I am in the travel expense claim statement, I claim something and you are the approver and you are not going to question what I am submitting as an expense claim, then there is an opportunity. So I am making the most of that opportunity to commit fraud. It could be a smaller fraud, bigger fraud, whatever it is. Typically what happens is, many of the fraud surveys state that people start with a very small type of fraud. It could be 1,000 rupee, 10,000 rupee, whatever. And then if it does not get found, then I am more confident. Then I will do a 1 lakh fraud, 2 lakhs, 3 lakhs, 5 lakhs, whatever it is. So that is where the opportunity is. Typically opportunity is lack of internal controls or collusion or whatever, or system weaknesses. So today when I am going to swipe attendance and if there is nobody monitoring, I can swipe attendance for 5 different colleagues as well. So it is like proxy attendance or whatever. So that is also there. Rationalization is, why am I committing fraud? I am a loyal employee in the organization. I am saying if I claim more, then there will be an expense to the organization. But I am saying the organization is paying me very less. So I am spending my life for the organization. What happens? The policy says I can claim something. So why should I not claim? Whether I have spent it or not. I book second AC, I cancel second AC, I go by bus or whatever, but I will still claim second AC because I am eligible. So that is rationalization. Whatever it is, it can be rationalization. I performed well, but my colleague got good ratings. He is anyway getting good incentives, he is anyway getting this thing, but at least this I will get. So I will commit fraud. So having decided to commit a fraud, I am trying to rationalize and justify why what I am doing is not wrong. So that is the rationalization. So any fraud situation, if you take, it will definitely fit into 1, 2 or 3. Any of the 3 categories, or it could be 2 of the 3 categories, or it could be any of the categories as well. This was the earlier analysis, but then now there is something called fraud pentagon as well. There are 5 dimensions, they say, and in addition to rationalization, opportunity and pressure, there is something called arrogance. Arrogance is, all of you would have seen the movie Catch Me If You Can. So I commit fraud, if you can, you catch me, fine, till the time I will continue to do it, and even if you find out, you cannot take any action against me. That is arrogance. Okay, so that is the next step. And competence, of course, to commit fraud also you need some level of competence. Not everybody can commit fraud, but some level of competence is required. So that is 2 more dimensions that has got added. Now people are saying there is another 2 more, then 5 becomes 7 also. So people keep analyzing, they have a lot of spare time, so they are analyzing. So that's the way it is. So some global trends, I have taken some survey results from some of this is from a PwC survey, I think, where they've asked organizations whether your organization has experienced fraud situation in the last 24 months. And in India also 60% of the organizations say yes, global also 45% of the organizations say yes. The losses committed because of, the losses impacted because of fraud. Again, there are 3 categories of fraud that comes. One is financial statement fraud, which is where falsifying the books and showing more profit, showing less profit, whatever it is. The second aspect is corruption, which is all the kickbacks and bribe and whatever. So that is the second category. The third category is asset misappropriation. So I take away the inventory, I take away some cash, I divert funds, whatever it is. So those will come under. So typically any fraud will also come under any of these 3 buckets. So the impact of this, though we think asset misappropriation will have the most impact, actually the most impact is on the financial statement fraud, because that is something that is committed more from the top. So obviously they falsify, they get more funds, whatever it is. So the impact there is much higher. So okay, I'll skip the slide. So typically they say, okay, what is the profile of the fraudster? Whether it is at the lower level employee, at a manager level, or at a owner level, again, it is situation agnostic, because at the end of the day, everybody is, I don't know what is happening. So at the end of the day, slide work so irrespective of the position in the organization, there is as long as there is an opportunity and somebody can rationalize, they commit fraud. So it can be a manager, it can be a senior executive, or it can be a lower level executive also. Thank you. As mentioned, people are also trying to analyze the profile of the fraudster, whether it is educated personnel or is it uneducated, or the less qualified people who commit fraud. The more the education is, the more the innovative mind works in a direction where they actually commit more fraud. So that is also something that is not surprising, though your expectation is the other way around. As you are more educated, you will be more cultured, you will be more following the law, but actually they know the law, they know the loopholes, they know where the opportunity is, they exploit that. So collusion, again, as mentioned, fraud is something that is circumvention of control. Even though you may have a maker checker, you may have enough checks and balances within the system, if 2 or 3 people collude, then you can beat any system that is possible. Right from, you might not even have got the materials, the security will put a stamp, then your quality team will put a stamp, then your inwarding will happen, your consumption will happen, your accounting will happen, your bill will be certified, you will make the payment. So the entire process chain can be broken if there is collusion. So what is the age of people committing fraud? More than 2/3 are 31 to 50 years. So it is not the youngsters who are committing fraud, it is people who know what works and what doesn't work, and they take advantage of the system. So What are, so again, many of these are from the Association of Certified Fraud Examiners survey. That's the global institution which is offering a certification on fraud. Many of you might know about it, like CISA has a certification. ACFE also has a certification course which is called a Certified Fraud Examiner course, focused on white collar crime primarily. We also have something called FAFD here. The institute has FAFD, but that is focusing a little bit more on forensic accounting and fraud detection, whereas this focuses a little bit more on white collar crime. How do you identify, how do you investigate, what is permitted as evidence when an investigation happens, and so on. So that is, so they conduct a survey which is called Global Economic Crime Survey, and state of the profession and so on. So one of the survey this is a survey that is available in the ACFA website. You can download the report also. It's a very interesting report. It also gives you the report by geography. It takes a global report. It also takes an Asia report and so on. So you can actually see. And typically when we do an audit or when we interact with people, there are certain typical warning signals on whether a particular person is actually might be committing a fraud or not. So one of the main things that comes is living beyond means. This is a government employee, this is the only source of income, but he is coming in a luxury car, or he has a property in a prime location, or somebody is wearing jewelry which is very expensive. So see, if somebody commits fraud, makes money, what do they do with it? At the end of the day, they'll have to spend it somewhere, right? And if they spend it on themselves, at some point they may want to show off the wealth. So if they show off the wealth, and on the other side we know that these are the only sources of income, obviously something does not add up, and that itself should be a red flag for us to see, okay, something might be going wrong, and that might warrant flagging off or an investigation. So of course there could always be, somebody might have won a lottery, all that is always possible. Every time I go to Kerala I buy a lottery ticket, but I never win. That is a different issue, but that's the way it is. So nowadays, of course, living beyond means not everybody is flaunting of wealth also. We did a recent investigation on a hospitality company where they run the cafeterias in many of these corporates like Cognizant and so on. So they handle the entire housekeeping and cafeteria. So and these are clients who have like 3,000 employees, 4,000 employees. Cognizant has bigger size, but they may have different vendors for each of their facilities also. So these people were providing services to many of the corporates in terms of providing hospitality services. They also outsource work to somebody else, and the procurement guy here, we got a tip off that procurement guy is getting some bribes to facilitate some service providers and favor them and so on. We were able to establish that he is getting money. How, I'll come to that a little later. But when we talk about living beyond means, we couldn't see any such signs of this guy living beyond means, because he appears to come in a very simple manner, appears to have a very simple life, but most of the excess money that he has got was invested in bitcoins and so on. So, which we never thought. Even I don't know how a bitcoin operates. So maybe only people having money might know how it operates also. So, but we were able to trace back how he got the money and how he invested. There is a case study a little later, we'll talk about that. But so not necessarily living beyond means might be visible. So, but when you have a lot of these informal conversations, you will get to understand where somebody is calling you for a housewarming ceremony or something, and it depends on where they have bought the house, what is the total cost, what is the EMI, and if you see 2-3 members in the family supporting that EMI also, and the salary levels that you anyway are privy to in looking at payroll and other things. If something does not add up, then it warrants an investigation. So that is where it stands. There could be people with financial difficulties, unusually close association with vendors, control issues, unwillingness to share duties. So many of the banks have a mandatory time off policy. The reason for that is mandatory time off or mandatory job rotation policy. The primary reason is you can't have the same person doing the same job without him delegating the work to anybody else, because that itself gives them an opportunity, because he knows the system in and out. So he knows what works, what doesn't work. He knows at what point of time it will just be a workflow based approval, or it will just be a pop-up which comes, somebody has to say ignore. It could be anything. So the longer that they are, they know how to beat the system. But if somebody is given a mandatory time off or a job rotation, instead of person A, person B is actually working in that role, they may actually uncover a lot of wrongdoing that the other person has done. So one of the good controls to have is job rotation and mandatory time off. But again, as such, we don't have enough people doing the job, so people advocate 70-hour work weeks. So there is no question of time offs and this so on. So the other thing is, of course, there was one more slide which was there, which said whether which gender commits more fraud. Again, we believe in equality, so we demonstrate that here also. So of course, some of these recent incidents we know. Okay, Gensol was in the books in the recent case. UCO Bank's situation was there. This was 2 days back. Bank officials stole crores from FDs and invested in stocks. So this was I think 3-4 days back. I think June 6th news. And then we had somebody was duped by a cyber fraudster. This is also something that we are seeing. Anybody you call nowadays, beware of cyber crime, etc. Somebody saying digital arrest and so on. So that is also a fraud, but that is not necessarily on the company. So it could be on a particular individual, but that is also a fraud nevertheless. So reporting obligations, we spoke about this a little earlier. Companies Act has a reporting obligation where if the auditor comes to know about a fraud, within 2 days they will have to report to the board or the audit committee. If the fraud amount is more than 1 crore and the auditor fails to get a reply from the board or audit committee within 45 days, then he should forward a report to MCA under Form ADT4. The moment you identify something as a fraud and go to the company will say it's a mistake, it's not a fraud, it is only an error. So first, getting a common ground between you and the company on the fact that it is actually a fraud itself is a humongous task. So once that agreement happens, then I think the next step is to do the necessary reporting. That is the obligation that exists. There is a guidance note which the institute has also come up with on what are the obligations on reporting for fraud. Similarly, CARO talks about a mention about fraud. SA 240 also talks about communications to those charged with governance on fraud. So the next few slides are more on specific case studies. We'll take some few examples. We'll have a debate amongst ourselves on what needs to be done in case there is a situation of fraud. So there is a company, could be any company, which is an IT services. They buy hardware, software, they use third-party vendors. That is the background. There is a procurement department headed by somebody who manages vendor selection. There is an internal auditor who got a tip through ethics hotline. I don't know how many of your clients have the whistleblowing policy or there is a hotline. And global survey says that many of the frauds are uncovered only with a hotline complaint. So the majority of the frauds, because I know that he is taking bribe or somebody is actually committing something wrong. I am afraid to go and directly make a complaint because my job is at stake. My safety could also be at stake. So but my says that I should complain. So how will I go and complain? Where will I complain? And that is where many of the governance principles says that, especially for listed companies, a whistleblowing hotline is a mandatory requirement, and you need to mention in your website itself how do you make a complaint on like a whistleblower, which should be an anonymous, which might be anonymous, because you obviously will not disclose your name when you are making a complaint. So what happens to those complaints, right? So the company has set up a whistleblowing hotline. There are complaints that come to that hotline. There could be an email ID where the complaints might come to that email ID. What happens next? Who is the custodian of that email ID? It could be the legal department, it could be the MD, it could be the head of audit, it could be anybody, right? The company will have to designate somebody to handle that complaints. Once that complaint comes, are you going to believe everything that is there in the complaint? I don't like you, I can raise a complaint. So it could be a very frivolous complaint also, me targeting my boss or me targeting some individual that I don't like in the organization. It could be a complaint like that, or it could be a genuine complaint. So you cannot either brush aside the complaint or you cannot give too much importance to the complaint also. So somebody will have to actually do a preliminary analysis to see whether that complaint really warrants an investigation or not. If the complaint really warrants an investigation, you can either do the investigation in-house within the organization, or you can engage experts to do the investigation. Again, the complaint could be financial, the complaint could be behavioral. It could be a posh complaint also. If it is a posh complaint, then obviously it goes through a different channel of investigation, because somebody is misbehaving with somebody, or somebody is ill-treating someone, somebody is whatever. So that is harassing someone, that is a different one. But where there is a financial implication, it is somebody getting bribe, money, kick-off, falsified reporting, then that definitely requires warrant an investigation. We had a situation where it's a large automotive manufacturer. There was a complaint that the shift manager is giving preference to people of his caste in terms of the shifts that they have to work, whereas people of, it's a multinational organization with 4,000 employees. But the complaint was that, which came through the hotline, was that the shift manager is giving preference to people of his caste in terms of shift priorities, and he is also giving preferences to them in terms of the overtime that they are working. When they are not working overtime or whatever, they are actually being given preference. This is one complaint that we got. How do you investigate it? Any thoughts? How do we investigate this? This is all that the complaint says. Is it something that warrants investigation? Also something that we have to think of. But if something has come through the hotline, we cannot brush it aside. So obviously that needs to be an investigation. So how do you establish that that particular shift in charge is giving preference to people of his caste? Is it wrong? Is it right? That is next. But whether it is happening or not, how do we establish it? How do we go about as an auditor to do it? Okay, look at the attendance or the shift allocation. Okay, then, and suppose there are 100 people in my team or 40 people in my team. So, and many of them are getting overtime, or say 30% of them are getting overtime. Next step, there will have to be further analysis based on that to see, are there specific individuals who are repeatedly getting overtime? Are there specific individuals who are only working on that particular shift? And then you will have to, like what Rahul Gandhi is asking for a caste census, we will have to look at a caste census here to see whether these people are actually belonging to the caste that is being mentioned in the complaint, so that that particular person is actually getting preference. So ultimately it goes down to data analytics of the attendance records, the overtime records, the shift allocation records. But just by looking at that alone, we will still not be able to establish whether he is actually favoring that person or not. He will say these people are the best suited to do their job. I am only doing a skill set based mapping, the turning operation, the grinding operation or something else. Only these people are capable enough of doing it. So I am actually allocating them for that particular shift. So he will obviously have an explanation. So to go beyond and establish that he is willfully doing it, and then he will say, oh, because of this, what is the loss? At the end of the day, anyway, you are paying wages to 100 people. How does it matter whether you're paying to this person or to that person? And instead of paying overtime to this person, I would have paid overtime to that person, because the work will have to be done. I'll have to anyway supply to my customers. I am meeting my production schedule. So what is the problem? So that is the justification that will come next step. So where is the loss for the company? So how do you call it a fraud? So then that becomes a debate. So however, it may be a code of conduct violation, it may be a employee handbook or a policy procedure violation. You can still take action against that employee, but coming back to our reporting requirement on fraud, etc., does it qualify as fraud? Do we have to go and report to MCA? That's next step. So it depends on what is the value and quantum of the overtime that we are paying. Is it crossing 1 crore? It's again too much of a theoretical debate. But having said that, this was one type of complaint that came. The other type of complaint that came was, there is a particular employee within the organization who is also parallelly running a financing business. He is giving a lot of loans to our staff at 12%, 14%. And he is very tough with people who do not repay him, and he ensures poor appraisals for them. So this is a complaint that you get, a very vague complaint. But how do you actually prove this? Because most of this could happen in cash, or it could happen from an account that is not associated with him. It could be from some bank account to some bank account. So somebody has complained. The person who has complained might have actually also taken the loan, and he might not have been in a position to repay. He might hold a grudge against that person, so he might have complained. But these are typical real life situations on whistleblowing cases that have come. But there is a reporting requirement to the audit committee wherein you say there are so many whistleblowing complaints that you have received. These are the things that we have taken it to closure. We have done an investigation. We have taken it to closure. These are the people that we have taken action on and dismissed or installed new controls, etc., etc. And this is how it is. That is, there is a reporting requirement to the audit committee. Now audit committees are asking every quarter, what are the ethical violations, how many ethical violations, what has been the action that has been taken. But suppose this is a complaint that you receive, how do you address it? So these are again things that you may not think of, but like normal course of matter. But they will say, okay, as long as he is doing the office work and he is doing a good job, he is getting salary, what he does outside, it's none of my concern. That could be one approach. Then we talk about something called moonlighting. That's a new concept that people were talking last year. So anybody knows what is moonlighting? Working in two organizations. Okay. So I'm having that typically happened during COVID, but I'm also on I'm logging into this call, I'm logging into that call. Okay, I'm working for two companies, I'm getting two. So actually the companies caught them because it so happened that this guy was stupid enough to have the same PF number. So something like that. But what I'm saying is what comes under moonlighting is also not clear. Okay, suppose I work in an organization Monday to Friday, Saturday, Sunday I take classes for CA students, let us assume. Is it moonlighting? How do I know that you are only taking class on Saturday, Sunday and not during working hours? So if I take during working hours, is it moonlighting? If I don't take leave from the organization, but I'm in the office, logging on to a Zoom class and taking classes, then obviously there is a violation. But very difficult to prove again. So suppose I say, is it moonlighting only if they get monetarily paid for the other role, or if it is voluntary social service, like I help poor children, I help them to study for their exams, I don't get any tuition fee or whatever, I'm using my spare time, Saturday, Sunday is holiday, I can do whatever I want. So is it moonlighting? It is not technically. Or there are a lot of people who have some other passion, right? They may be performing in some kacheris or whatever. So I'm a music expert, whatever. So Nothing wrong. But is it my obligation to inform my organization that I am also doing something else? The highest level of ethics says yes, but not many people do that because they say, no, that is something that is more like a hobby. But if I am doing something which is very similar to what my organization does, I am working in Hyundai, but I am also having a mechanic shop, doing after sale service for some cars, maybe yes, it will fall under the same definition because I might be using the information or the expertise that I gather during my job to also gain some other means of income for me. Similar, the reason why all these insider trading rules all came is also because of that, because at the end of the day I am an employee, I am privy to a lot of price sensitive information. So obviously when I am working in a listed company, I cannot be investing in shares of that company because I know that the share prices are going to go up or go down. So I can very well make money using the information that I have in my role. On the other hand, there are people, I work in the finance department, but every day I come and do, during the morning trading window, it's not a listed company, forget about, I'm just working in some, so I'm using the office internet, I'm using that time to invest on shares. Is it moonlighting? Of course it is moonlighting. You're using office facility, office internet, whatever, and you're supposed to be working in that time, but you're using that time to invest for your personal gain. But how do you prove all this, right? You cannot be policing all employees all the time. It's very difficult. But that is where I think the Institute of Internal Auditors in Florida has a paper, a guidance note on something called as a culture audit. So rarely we do a culture audit here. They say test the pulse of people from a, this is the organization culture. Are people following the culture of the organization? Like today you can talk about few organizations which stand out for high moral values. You say Tatas have certain principles. You can say that for many of the organizations, I'm saying. But in a good way or in a bad way. So that is also possible. But when you say this is the culture of the organization, they say that that culture of the organization should percolate to the lowest level of the employee. That anybody in that organization is a representative of that organization and he will behave in a particular acceptable manner of behavior. So a Tata employee misbehaving, like you see a lot of these Indigo staffs talking rudely, and they say, yeah, Indigo is like that, the culture of Indigo is like that, they are monopoly, they are leaders, they talk rudely, they charge for everything. That's how we perceive the culture. Whereas you don't perceive that in a Tata organization, typically. I'm just giving an example, it may be true, may not be true, but I'm saying that's how culture is perceived. So similarly, when a person is supposed to come to the office and work for that particular period and he's using the time to do something else, it reflects on the culture of the employee and the organization. So is it good, bad, acceptable, unacceptable? It's up to the management to decide. But these are practical situations that happen. So coming back to this case study, so this is an organization where they are providing IT services. There is a guy in the procurement department who manages vendor selection. These are some of the people that we are talking about. So there is another vendor, Tech Innovations is a vendor whose RFP, I submit a proposal request, and there are 3 vendors who submit responses to the proposal. And I know you, so I am telling you, please quote so much so that you will be considered for that particular bid. So that is the second point on rigged specification. So I do an RFP primarily to favor somebody. I will say, okay, like probably many of us, I don't know, if you are all practicing chartered accountants, we are empaneling with the Indian Banks Association for forensic audit, or SEBI has now released the list of forensic auditors and so on. They say, if we have to appoint you as a forensic auditor, you should have done so many investigations. Boss, only if you appoint us, we will be able to do the investigation. It is a circular reference. Okay. But the reason why they are giving that is they know that if I put all these specifications, only these 6 firms will get shortlisted. Out of the 6 firms, I can select 4. But you provide the criteria in the RFP in such a manner to suit certain people. That is what the second point is, rigged specifications. RFPs are subtly tailored to favor a particular vendor. Then that vendor also submits inflated invoices, which is being certified by somebody, and they pay. And there are also undisclosed payments. That is, whatever inflated payment, you're giving me services for 1 lakh, but you are invoicing 3 lakhs. I certify the bill, you get paid 3 lakhs, the differential 2 lakhs we split separately outside. Then there is a product substitution. You are supposed to deliver product A, but you are actually submitting a substandard product B or product C, and I am accepting that. So there are various suspicions about fraud that has happened in this particular situation. So there are some, you are the internal auditor. What are the steps? This is the complaint that has come, okay, about a particular vendor. This is the vendor that is being favored. The RFP has been rigged to favor him. There is inflated payment to him. There is a kickback that is happening. That is the complaint that has come. So as an internal auditor, what steps will you take to investigate? That is question number 1, which we can probably, like in the earlier case, you said, somebody said that we'll have to look at the attendance record and so on. So how do you actually identify whether there is a vendor favoritism or not? Any thoughts? How do we know some vendor is being favored? Quotations are being received, yes. And I have received all quotations. Okay. Who approves it also, right? Whether it is the same person who is approving. Okay. Then what else next? And we also see the pattern of how many orders have been given to that particular vendor. Is it a one-off situation, or every time that I have a requirement, though I receive a lot of quotations, but I still go to only this particular vendor, and I am the only person who is deciding that, because we had a list of characters in the previous slide who said this guy is heading procurement and this guy is doing this. So every time it is coming to me for approval, I'll probably, even though you are saying this person is L1 or L2 based on the quality, I still decide that no, we'll go ahead with this person, and then we go ahead with this person and ultimately give the contract only to that. Internal audit. This is more a question for the internal audit. How do you go about? So the internal auditor can verify that. So using the past data. As a routine, they are supposed to verify. Now that they have received a complaint, the focus is even more so on that. So typically, as a routine, when they verify, what will happen is there are 3 quotations. Yes, there is 3 quotations. There is a quotation comparison sheet. Yes, there is a vendor selected. There is an approval. Approval is as per the delegation of authority. I will move on. But the moment I know that there is a complaint, I will actually go through this with an additional pair of lens to see, even though all documentations are proper, is there something that goes beyond this? So a little bit more deeper scrutiny is something that the internal auditor will have to do. That is also possible. And when they are saying that it could be excess invoicing, suppose the original RFP is for 1 lakh or 1.5 lakhs or 2 lakhs, but ultimately the invoicing is for 3 lakhs, 4 lakhs, and there is an increase in price over a period of time. Is the increase in price justified? Then you can go back again and see the comparative quotes to see what are the other things that, see, initially what will happen is everything will be proper. I'll issue a contract to you for 1 lakh, which is the price, which might be the L1, whereas other 2 people might have quoted 1.5 or 2 lakhs. But I'll issue a contract for you for 1 lakh, but then I'll issue a contract amendment subsequently for another 2 lakhs. So the contract amendment process may not go through the rigorous approach of a contract issuance process. The contract issuance process is for vendor selection. At the time that I selected the vendor, I decided that this will be the right vendor. Having decided that this will be the right vendor, the amendment process is easier to manipulate. So I may manipulate and give you a higher value amendment so that you invoice me, and then the difference is something that we split. So that is okay. That is normal course of time. Significantly higher.
Definitely the internal department
Should question.
They'll have to verify with the purchase orders normally.
Correct. So that is where the more deeper that we go, we will find out much more. So that is where analytics also helps in terms of looking at the trend. So suppose you find that there is collusion. What next? So suppose we find that I am favoring a vendor, or I am giving an increase which is abnormal, not that usual 10%, 20%, but I am giving an increase that is abnormal. Suppose I, as an internal auditor, find out that this is the situation. What next? What do I do next? I report, okay, the typical internal audit approach is to issue a report. That report, they will give a justification, management action plan, noted. Simple management action plan is noted. Noted is not an action plan, but that is how you get a response to most of the internal audit reports. And then you want to present it to the audit committee. You say this is high risk. There will be a negotiation. No, high, why high? Only one-off case. I buy in crores. This is only 4 lakhs. Under what materiality threshold does it come as high? Ultimately, tomorrow is the audit committee. You are under pressure to release the report. So you go ahead, okay, you want it medium? Okay, no problem, medium. You report. Audit committee has only 15 minutes. They have other things to discuss. So does it actually see the light at the end of the day in terms of an action being taken? So next, does it also dissuade somebody from favoring a vendor or issuing a contract? You are not discontinuing that practice. At the end of the day, you are managing that practice. And even as an auditor, you go and report, nothing happens. So how do you actually address this situation in a very effective manner? What can be done differently? So that is where I think the judgment of the auditor also comes into picture, the internal auditor or whoever is doing the forensic audit. Any matter of impropriety or fraud, if I have a direct line of reporting to the audit committee or to the CEO, ideally the internal auditor should report to the audit committee. But who decides the scope of the internal auditor? Who calls you for appointing? The CFO calls you or head of audit calls you. You very rarely get to see the audit committee members other than the 4 meetings that happens in the year. That itself is not a good practice, but that's the way it is today. If suppose one of the perpetrators is the CFO himself, do we as internal auditors have the guts to report? Point number 2. Because we feel that the moment I report, I will not be appointed as internal auditor next year. My revenue is lost. So in the interest of my revenue, I go ahead and compromise. So internal audit by definition is independent, objective, assurance that you are providing, all that theoretical definitions are there. We are supposed to be bound by our own conscience. So are we doing the right thing by not reporting or by not bringing it to the notice of those, not necessarily those charged with governance, but those who actually we should bring that to the notice. Third, the moment you start reporting this, next time that particular area will not be in scope for you. So then are we saying that it is a scope limitation when we are reporting next time? So life as an auditor is not an enviable position today, especially the internal auditor. At least statutory auditor, you're supposed to issue a true and fair view and whatever, and you cannot escape stating that no, they did not provide information. But as an internal auditor, you have certain responsibilities and you're bound by that boundary. Many a times they say, okay, you cannot do beyond this because my budget is only this much for internal audit. Under this budget, this is the area that you do, this is the frequency that you do, and that is also decided by the CFO many a times. So under these circumstances, you find something that is a fraud, still your reporting responsibility is to go and report to the audit committee. If after going through the proper channel, of course you do discuss with the head of procurement, you discuss with the CFO, you find that they are very defensive, they are not, and you are able to establish that it is a fraud, then ideally they should go to the audit committee and report. if the company is not a listed company, they don't have an audit committee, they don't have independent directors, you can very well go to the CEO and report. If the CEO himself is committing a fraud, please resign, move out of the organization, either as an employee or as an internal auditor. Because the moment you are in and being silent, you are party to it, whether you like it or not. If your conscience has to be clear, then you will have to move out. And even there, you still want to report, you can still report. But many of us don't. That is a different issue. But that is the ideal requirement. So that's where when it says Prevention of Corruption Act, right? Anybody can complain on a corruption situation. So there is Prevention of Corruption Act. There are Foreign Corrupt Practices Act that is in the US for a US listed entity. There are various regulations that are there. Now you have the MNS, whatever the newer acts that are there. And as an internal auditor, assuming that you found out these and you managed to get a concurrence from the organization that yes, we do agree that there was a lapse, maybe we need to address it, then our responsibility is also to give recommendations in terms of fixing that so that it doesn't recur again. So maybe segregation of duties, above a particular threshold I will approve or somebody else will approve, I can only issue a recommendation. So I cannot be the only person who is always deciding on a single source, single vendor. So there has to be enough checks and balances so that there is some segregation of duties so that it doesn't occur again. So those are more preventive, forward-looking measures. But the ethical dilemma that comes is the one that I explained. Having identified a fraud, what do you do? So what law expects you to do is something, but what you are ethically expected to do. So that is where it's a gray area again. So typically, I think many of the points that you mentioned, one is concentration of business, there is lack of competitive bidding, there is a spend pattern. So these are the analytics that somebody has seen, the internal auditor has seen. That is where I found out, or the internal auditor found out, that yes, there is a vendor favoritism that is happening. So these are the red flags that typically you see. So learnings from this case study is segregation of duty, regular audits, surprise audits, vendor management, whistleblower mechanism. Again, whistleblower mechanism is a very strong method. Forensic audit steps could be data analytics, do a vendor background check. There are cases where we have seen vendors are submitting invoice and 3 vendors are submitting invoice from the same premise. If you look at the address, TDS PAN will be different, GST number will be different, but it will all be, you can even see the letterhead pattern, which will all be very similar. You go and see in that location, there will be nothing. But because you need different invoices, I am getting different invoices. But the service itself might not be rendered. We have seen in another organization where the person in charge on indirect expenditure, of course, typically material related purchases, payments follows a particular pattern, because at the end of the day, ultimately material comes into the organization and it has to be consumed or it has to be sold. Okay, so the control there will be much better. Whereas on indirect expenditure, suppose AC maintenance, let's take AC maintenance, housekeeping, gardening, we are seeing 4 invoices for gardening from 4 different vendors, whereas only one vendor has actually done the service only once. So they say I have only 20 ACs, but I have AMCs for 84 ACs. If you take all the, so, but if you do as a normal internal auditor, when we do bill passing review, you will have a vendor invoice which is duly certified by somebody, the head of maintenance. It will go to the accounts department. There is a vendor code. He is an MSME. I would have paid within 45 days. I am perfectly in compliance. All papers indicate perfect compliance. But if you step back from the transaction based review to a proprietary mindset angle, if it is your house, will you permit 4 vendors coming and servicing the same AC? Obviously you will not. The same mindset should apply for the accounts payable guy. Assuming he is not identifying, as an internal auditor you identify, then obviously your responsibility is to report. Suppose the same, we talked about the ethical dilemma of the internal auditor. Suppose I am in the accounts payable team and I get 4 invoices. I am not responsible for issuance of the contract. I am not responsible for certifying that bill. I am only responsible for doing a two-way match. Is there a contract? Bill that is certified? Is the bill certified following the same rate? That is all that I am supposed to do. But I know there are only 20 ACs, but I am getting AMC service invoices for 84 ACs. As an accounts payable guy, should I question or should I not question? There is a budget and the expenditure falls within the budget. The moment I question, obviously people say, what is your problem? Somebody has certified. That person who has certified is authorized to certify as per the delegation of authority, and it's a budgeted expenditure. The expense that is coming to you is well within the budgeted expenditure. There is no variance that you have to explain. Why are you not passing that invoice for payment? But I know something is wrong. So what do I do?
The person who would say that will be in hand in glove with the person who's committing fraud. Otherwise,
Correct. Those people are all hand in glove. Yes. But I am the accounts payable guy, but I am not hand in glove. So what should I do?
But you know very well that there are only 20 cases and the 80 was
Correct.
cases of the AMCs they have been charging. Definitely you can report.
Report to whom? That's what is the question.
Fire or
Finance controller, provided he is not involved. So,
no, even if he is involved, if he is not going to take action, definitely it will go around the company. No, definitely. I'll not talk only to my CFO. Initially, I'll talk to my CFO. If he's not going to take any action, I'll talk to my colleague also. So it goes around. Definitely.
no, see, one is going around is informal, but formally, as you rightly said, you report it to the higher authority. Sometimes I am afraid to report because I'll be sacked. So, but I want action to be taken. That is where, again, coming back to the methodology of whistleblowing, that is where whistleblowing works. Because at least I complain to the ethics hotline or to the whistleblowing hotline with the hope that something will happen. Okay. At least my conscience is clear that I identified something, I have reported it. What happens after that is not in my control. But if I notice something and I don't report it, then it will be an indirect method of being complicit with the crime. So that is where the whistleblowing mechanism is also coming. So the second case study, again, this is again very interesting case study where we have a technology company where suddenly on a particular day, 5 people come to the security gate with a valid offer letter issued by the company. In the company's letterhead stating that you are hereby requested to, you have been appointed as so you are hereby requested to report to this premises on this particular day. 5 different people come. The company has not issued the offer letter to them. This is a real case again. A lot of tech companies have faced this. So this is the situation. You are the internal auditor. What do? You have been said that this is a problem. So what next? How do you go about addressing the situation?
This looks more like something from external agents, probably like
Okay. I will not come to that conclusion straight away, but it is possible.
interview them and find out how did they get those cases.
Correct. That is something that we have to do necessarily and get the document that they have subjected to verification, all that. And then the modus operandi itself has to be found out. Like as you said, who contacted you first? Was it did you apply to the company website or did a recruitment agency contact you? Who interviewed you? Virtual interview, physical interview. It's like that movie that happened, right? So where the people are recruited for the CBI and so on. So similar to that, it's happening in tech companies because many times the interviews happen virtually. You don't know who's on the other side. Somebody is giving you a Zoom link and you go and attend that interview. Then you are said that you are selected. Then an offer comes to you through email. The email could also be mirroring that company's email. It's not from a Gmail or whatever. It could be from a company's email, or as you said, maybe the recruitment agency says that I've got the offer from the company for you, I am passing it on to you, and I pass it on to you. But why do people do this? What do they gain in this? Who is making money or who is benefiting from this? What could be the fallout? As commission from whom?
From the person who got the offer, who has been given the offer.
Okay.
I'm given the offer, I take it. And if it's a third party, then I pay.
So if I am paying for an offer and that offer is fake, then I think I have to face the consequences, ideally. Because if I am applying for a job, I should get the job.
No, I applied for an agent. As you said, I'm applying for an agent.
Job seekers should pay.
Job seeker should pay?
Yeah, usually job seekers will be paying.
Both will pay. The company will pay as well as the job seeker. Both will pay.
Are job seekers paying?
Yes, I guess it should have.
Okay.
Job seeker, they are paying it.
They are paying by practice, right?
There was, see, I've got an agency, I'm an HR agency, so you apply for me. You'll have to pay me, no, if you get a job, you'll have to pay me that 1 month for salary as commission or something like that.
But is that a regular practice? That's what I'm asking.
Yeah, there's nothing wrong with that. Like, I'm
Okay,
an HR
fine. So 1 month, so somebody is making 1 month's money. Okay, that is the bottom line here.
But that is fake company. Though fake offers given and job seekers are paying it.
Sorry?
Fake offers given and job seekers are paying it.
Job seekers are paying for 10. So suppose this is only 10 people. Those 10 people would have paid 1 month's salary to that agency. Okay, what are you saying? Sorry?
It will probably be like a shakedown, like you can threaten the company with litigation, like I have an offer.
Correct. That could be a further blackmail on the company, stating that I'll damage your reputation. I believed that this is a very genuine, you are a leading organization. I thought it was genuine. I left my job. It is not only the fact that you are not employing me, but you should also pay me for the loss of my previous employment because I have resigned based on this offer. All that. When I want to claim, I will claim everything. So fine. Okay. What could be other fallouts? And you said initially it could be somebody from an external agency. What if it is not? Someone from within, why not somebody from the HR department itself? Because he knows the practices, he has access to the letterhead, he has access to everything.
I mean, they will gain it.
No, I am disgruntled, I want to damage the company. See, many times gaining is not only money. So, that is also, I'm just speculating. I am also saying why, what. So,
It could also be like,
or he might also be getting money. Like the situation that you are saying, it's not just the recruitment agency getting money. It could be somebody within the organization. I am promising you something, but you take care of me by giving me 1 month salary. Anyway, you will pay 1 month salary to the recruitment agency. I am asking you to pay me so that I am giving you the offer. So, somebody might be benefiting. But as long as that person is not identifiable, if the person is identifiable, he is putting himself at risk. So, if all these emails are coming from, say, recruitment, like you have this Taj reservations and all, reservations at so-and-so-hotels.com, right? If it is recruitment team at so-and-so company.com, it's a common email ID. You don't know who all have access in the HR team to that common email ID. So, all the more so there is a risk. As long as the offer is coming from a specific individual's email ID, the HR manager or the HR head's email ID to the particular employee, that's a different issue. But if it is going from a generic email ID, then there is obviously a risk there. But many times it need not even go by email. It might be a courier that might have come to your house. Letterheads, anybody can print. See, today it's not a difficult thing to print an Infosys letterhead or whatever, right? You know, you would have also got an offer, somebody in your family would have got an offer. You can very well take this thing and create. So, this is actually happening. There are cases where some 80 people turned up in the company's front desk and said that I have an offer. And then they launched an investigation. How do you investigate? The investigation is, of course, you find out, you call these people, find out, etc. They say somebody contacted somebody, this thing, there is one common email ID. Assume you find out that there is one common email ID which schedules all these interviews. Next what? IP address, masked. That is a wild goose chase. Nothing happens. Then, how do you prevent? So, do we accept that every day somebody might turn up, give instructions to security that somebody comes, don't allow them with an offer letter? Sometimes you will lose genuine employees also who will actually coming in with a valid offer letter. So then this actually happened, but then of course this is TCS website. You can actually go and see TCS website. As a vigilant job seeker, keep your eyes open, protect your interests. They are saying TCS never asked for any money or security deposit. This, if you go to TCS, this is there on all the tech companies' website now. In the last 4 months, you can Google it and see. TCS sends hiring email via TCS domain only at tcs.com. TCS HR never shares their employee ID cards to appear legitimate. TCS IT offers can be validated on TCS fraud alert page. TCS recruitment fraud helpline is 1800-209-311. TCS's official email ID is careers@tcs.com. Of course, I am giving more information to the fraudsters also, but TCS is saying this. So, same thing if you go to, this is recruitment fraud alert, important information, there is more guidance in TCS website. Similarly, you can see in Infosys website, most of the tech companies have started putting this. But it's an assumption that only tech companies have this problem, because if you have to apply for a job in Ashok Leyland or Lucas TVS or somewhere, they're actually going to call you for a physical interview. It's not going to happen through a virtual mode, etc. So the tech sector is more vulnerable to this. I don't deny that. So tech companies are taking, this is one of the remedial measures. I'm not saying this addresses everything. I'm only saying that the moment any of these is not there, you as a potential employee, please raise your antenna and think that, okay, something is wrong. Somebody is asking for money. TCS will never ask for money, but somebody is asking for money. That itself should raise a red flag for me. That is the conscience that they are trying to advocate. That's all. Be careful. Vehicle park, that owner's risk. Similar to that. So, the other flip side of this, one of the big fours interviewed somebody virtually, and the person who attended the interview and the person who joined were two different people. This is the other extreme. So I interview you, you answer all questions perfectly, but 1.5 months later when you join, you say, okay, I'll join in July 1st because I have notice period, etc. July 1st somebody comes and joins, same name, etc. Because I am recruiting you, but he has attended the interview on your behalf virtually. So many times we may not even keep the video recording of that interview. So when I am actually putting you on that project, suppose it is a GST project or whatever, you have no clue on anything on GST, but I am putting you on that project, and then I realize, oh, but these were questions that I asked during the interview, you gave excellent answers, etc. But then, so that has also happened. So then people are saying, okay, I'll start recording the interviews, etc., etc. See, again, there is no end to all this. So there is something that you find, then you take a corrective measure. And then there's somebody who will find a different way to do a corrective. Then they'll say, okay, screen froze. There'll be a voice from somewhere. I'll sit this side of the screen. The other side of the screen, somebody will talk the answers. I'll do a lip sync. I can do all that. So you put in a control, then there will be another method to circumvent that control. Then you put in another control, then there is again. But there is no end to this. But only thing is, see, at all points of time, let us be a little bit more careful that somebody can always commit something wrong. So don't take anything at face value. All that glitters is not gold. That's all. So that is this case study. Let's move to the next one. This is a what do you call, online learning institute. I'm not talking about the one which is next door, but Generally, I'm saying you get a Harvard degree sitting at home. Now nobody wants to go to Harvard. That is again another issue. But I'm saying you have all these e-learning courses, right, which gives you a certificate from IIM or certificate from Harvard, Wharton, whatever, at probably a fraction of the cost that it will be. You don't know whether those certificates are true. You can at best put it on LinkedIn stating that I have passed, I'm proud to inform that I have passed this course, whatever. But so the other one is the genuinity of all these online courses and whatever. The other thing is assuming that these courses are genuine, and you had FITGI which is having a problem, Byju's had a problem, everybody else had a problem. But where there's a question on more on revenue recognition. At what point do you recognize revenue? I pay the course fee for the year. For you have students joining FITGI paying course fee for 8, 9, 10th, 11th, 12th, or 9, 10, 11, 12 together. So do you recognize the 4 years fee as a revenue upfront, or do you do a deferred revenue? What could impact revenue recognition here? Is it okay to recognize revenue upfront? Why is it not okay?
Expenses will be spread over the next 4 years.
Okay.
You cannot consider the revenue.
So matching concept. Okay. Huh? What does 115 say about this recognition?
So when the service is provided, whenever transfer you recognize revenue.
Okay. What could be other considerations? Suppose I say recognizing revenue is correct. What could be a case for recognizing revenue as correct?
Everything together.
No need of refunding the money.
So the contract terms becomes very important. So the contract term says the moment you make a payment, even if you discontinue the course, I am not obligated to refund. Then what prevents me from not taking revenue?
The student is there for next 4 years. The amount of money which we have to spend, it is there. If it's not going to happen, second or third year, whatever, at that point of time, we can consider as a revenue. But
Correct.
it's going to be there.
Not on day one.
Yes.
Not on day one. Valid point. But the bottom line from what you are saying is the contract terms also becomes important. The refund clause becomes very critical in terms of recognition of revenue. So this was a situation where it was more because they got funding from venture capitalists, they had a pressure to showcase revenue, etc. So they were compelled, the pressure on the fraud triangle, the pressure was for them to recognize revenue upfront. And beyond a point when people started asking for refunds, etc., because many a times in FITGI also the same issue happened where they say 9, 10, 11, 12 you pay, and when you are in 10th standard, before August, if you express a desire to discontinue, then the 11th, 12th fees will have to be refunded. The 10th fees that you have paid, even though you are discontinuing in August, that will not be refunded, whereas the 11th, 12th fees that you had paid will be refunded. That is what was there in FITGI's terms and conditions also. And there are people who had actually expressed that before August that they want to discontinue, but they did not get the refund. So that was one incident that happened. The second was there was pressure on them to recognize, so they recognized everything. So there were a lot of issues there. There was a lot of diversion of funds. There were other issues also. But the crux is to look at the contract terms, look at the deferral of revenue in line with the accounting standards and in line with the matching principles of cost. So that is what needed to be looked at. Yeah. So again, how were Ind AS 115's principles violated? What specific audit procedure should the external auditors perform? It could be external auditor or it could be internal auditor also. What procedure should they perform? What should be the controls? So what were the ethical dilemmas that were faced? Again, assuming that somebody within the organization finds out that there is a violation, what do? They at best will go to the CFO. CFO is saying, no, I know my revenue recognition. I am a chartered accountant, 20 years experience. You are a BCom graduate. Don't talk about it. So normally from the top. So very difficult. At best you can resign and move out. That's all that you can do. So or if there is a investor, if you have, you can do a whistleblowing to that investor. If there is a venture capital fund, I, as an organization employee, I find there are malpractices here, and I feel that you have invested in good faith. I feel there are malpractices here. I can very well report there to their whistleblowing hotline also, if I really want to. Why not? He is not. I see something is wrong, but why not? So there is always a gray area. See, who are you accountable to? Who is the stakeholder of the company? There is a shareholder, there is an investor. So when we are saying that I'm accountable to, it's again a debate generally that I'm talking. I'm not countering your point, but I'm only saying an organization has an objective to meet the stakeholders' interest. The stakeholder could be common public, the stakeholder could be an investor, the stakeholder could be a shareholder, the stakeholder could be the CXOs that you call. So it could be anywhere. The stakeholder could also be a fellow employees, but everybody is a stakeholder. So like you said earlier that I talk to my fellow employee, I can very well talk to, what prevents me from talking to at the end of the day my objective is to prevent this wrong practice, and I want somebody to question management. And when I know that this wrong practice is becoming only from the promoter here, if I want to correct that, I have to go beyond that. Or you can go and report it to MCA or whatever. That also is something, because ultimately they file the financial statements. Or you can go and talk to the auditor, statutory auditor. You can do whatever. I'm saying a lot of times the gray area is on ethical dilemmas. Bottom line is that. So I know I have found something wrong. What do I do about it? Do I ignore and move on with my life, or do I do something about it? If I do something about it, will I be impacted? We earlier were approached by one of like a company like L&T for doing a toll audit. The toll, of course, this was all before the FASTag era, where you have the toll booths in the highways. We were asked to send a team to verify a particular week's collection vis-a-vis what is accounted. Those were the era where it was all cash and so on. And out of the 6 toll booths, 1 goes to a minister. Okay, it's a fact that is known to everybody. You're going there to audit. You're finding it out. You get a threat on life, obviously, or there is no cooperation. It's very difficult to handle such situations. Either you run back thinking that, okay, it's causing an impact on my life is more important than reporting this, or I need to do something about it. So many times the auditors are faced, the person who's doing that, I'm saying the auditor could be an in-house person or an external person, or it could be anybody. The moment I find something wrong, what do I do about it? Becomes a big question mark on what is acceptable behavior there. So it's a practical situation. So you can't do much. So what red flags should investors and potential acquirers look for during due diligence of such companies? So suppose somebody is investing and I know such accounting practices are happening, then obviously I will not invest. But having invested, should the person who has invested have a right to audit clause as part of the funding, that not just due diligence before investing, but on a periodic basis I can send my independent team to do the audit of your accounting practices. When they do, at least they will find out that I am recognizing revenue upfront for the 4 years on the sample that I am verifying or whatever it is. So that can also be a preventive measure or a detective measure subsequently. Again, having known what the risk could be, there can always be different ways of tackling it. So this is one other case study. Strengthen internal controls, enhance auditor independence, whistleblower. Everywhere you see whistleblower coming as a key this thing. So this is a hospital. which has permanent staff, which has outsourced staff. Okay, before coming to that, I think we spoke about recruitment a little earlier. Many organizations have something called as employee referral scheme, right? So employees refer some other candidate, then if that candidate comes and joins, then I pay him a referral bonus. Similarly, for an external consultant, a recruitment agency, I may have contracts with the recruitment agency to pay 1 month's salary or 8.33% or whatever for every staff that he identifies I on board. I may have a contract clause which says if that particular employee leaves within 6 months, you are duty bound to find a replacement, and I am not going to pay you for that replacement staff. So that could be a protection that I have in some of the contracts. So broadly this is a situation, but I get a whistleblowing complaint that for the same employee, I am paying both referral charges as well as recruitment charges. So how do you identify this, or how do you address this situation?
Once you receive a complaint, you can verify that.
Correct.
But before receiving the complaint, it's not that easy.
Why is it not easy? That's what I'm saying. Why does it go without anybody noticing it? When you look at the process.
How we build the internal control there.
So what? Correct.
In case of like an employee code.
Okay, that is again employee code dependent, like what he is saying. Correct, you're right. Then, see, typically what happens is the referral bonus that I give to my employees is added as part of the payroll process. Okay, because you are having your monthly basic whatever, your performance incentive, then there is another column for recruitment bonus, referral bonus, and then I make, so this goes through the payroll process, whereas the payment that I do to that goes through the accounts payable process. So that will be certified by somebody, that will be paid by somebody else, this will be paid, I'll give a bank transfer, and then ultimately, so somebody within the organization, the HR person, obviously the HR person should be the crux of causing this violation or making the most of this, because he knows where the loopholes are. This is going through a different process, this is going through a different process. This I make a payment the moment somebody joins, this I make a payment, the recruitment guy I make a payment once somebody joins, whereas for referral bonus I might have a process where after 3 months of somebody being on board, I will make a payment to you, make 50% of the referral bonus, another 50% I will pay after another 3 months. So this goes through payroll at a different point in time, whereas this goes through payroll at a point in time when somebody joins. Ideally the control is to have it linked to the employee code. For this new employee whose code is 12345, this is the only payment that has happened towards either recruitment or referral. If that control is there, well and good. I am going back to a situation even earlier to that. So today, when a candidate applies to me as part of the HR team, do I have a candidate source database stating that how did the candidate apply to us, whether it was through this recruitment agency, or through this referral, or did he directly apply on careers@tcs.com or whatever. So there can be a case where somebody has directly applied, but I will say, okay, I know this recruitment agency, so I will say, okay, you tell me that, I will send that profile to you, you forward it, because it has already come to us through the careers website. I will say, I will send it to you, you send it to me, I will pay you referral charges, you have done nothing about it, but we will share. That is also possible. So the moment collusion can happen, again collusion means it depends on who is maintaining the careers, the candidate database. Is there an independent verification within the recruitment team of that, or is there adequate checks and balances on certifying the recruitment agency's bills? Is there adequate checks and balances on certifying the referral bonus? If there are checks and balances, then the next step is collusion. So if there is checks and balances, still there is a problem, then there is obviously a collusion. So this was again an interesting case, but as you said, the moment it was reported, then investigation became easier. The moment it is not reported, the only other thing is, I should view this when I am going for internal audit as this could be a potential risk. What is the control within the organization? That is a question that I can very well ask as an internal auditor. But
The amount also involved. Less than a lakh, I just 1 or 2 lakhs.
correct.
I don't mind it.
See, broadly, when we do an audit also, materiality plays a very important role, as you rightly said, sir. Because if I am looking at my P&L and seeing, okay, recruitment agency fee is say 25 lakhs, 30 lakhs that I have paid in the last 6 months. Similarly, referral fee is also some 12 lakhs that I have paid. And both these put together is 30 lakhs. When I am looking at this, I am also seeing how many people have joined in the last 6 months. If it is all significant, then obviously you subject it to deeper analysis. And this 25 lakhs, 32 lakhs, if my payroll is say 300 crores, it will still be very insignificant. But it is still significant for this guy because he is still making 6 lakhs out of it. Assuming 12 lakhs I pay to you and get back 50%, I am still making 6 lakhs. Still it is important for him, but it may not be important for the company. But when I do an internal audit, I should view this as one of the risks. There could be a possibility that I might pay referral bonus and recruitment charges for the same candidate. If this is the risk, what is the control that I have within the organization? Like similar to what we test for internal financial control, right? We talk about IFC controls, we certify, but
Such a big company, controls can
we should have.
the control through a software. Right?
Yes, very much.
That's
Very much.
simpler. You don't need to
No, once you have the control, then you would decide whether it should be an automated control or a manual control. That is next step. But
control is pretty difficult, definitely. Automated control, it gives you
correct,
information immediately.
correct. So, but there has to be a control. That is the point.
These are big companies, not smaller companies.
Correct. Smaller company, you may not even pay both. So, the point is once, see, we'll have to start thinking like a fraudster to look at what could be the risk and look at what could be the control. So, that is where there is a slight shift in terms of the audit approach when it comes through an internal audit itself to look at what could be potential misappropriations or risks or whatever. Of course, materiality plays a very important role. So, here also it is the same thing, like you had certain permanent staff, certain outsourced staff. I have certain people on rolls, but I have also people who are contract labor, and there is case where the same employee is in both. But here I make the payment directly to the employee, there I make a payment to the contractor. And under the contractor, you have 10 different staff. So we may say, okay, if I'm making 2 payments, the same PAN number, etc., it will not be the same PAN number because you're paying to the contractor.
Because for the contractor, it will be a single number.
A single number, there will be a bigger amount that you will pay. So it's a very similar example, but ideally, what the contractor does with his payment, we may say it is none of our botheration, but as a principal employer, we are responsible. So if they have biometric, it is well and good. If they have attendance, again, many of these people will be on the field, they will be marketing guys, you go to Equitas Bank, there will be collection agents. So how do you track attendance in those cases? See, where it is foolproof, yes, they will find out. It's easier for auditors also to find out. Where it is not, that is where people take that opportunity window to commit fraud. So this is again falsified salary bills, payment approval, etc. Okay. So then I have one more. So it's more like a chit fund scam where you are investing in a chit fund, whatever, and then they promise you 25% return, whatever. And then, of course, what they do with that money and how they rotate and how it comes back, at what point of time you find the situation has been a lot more controlled now with a lot of RBI guidelines on non-banking financial services and so on liquidity ratio, what is the money that they should have in terms of the investments that they are getting. Again, public money is involved. Suppose you are again working in the accounting team and you find there is non-compliance, the same ethical violation, ethical questions come into this thing. So there's a lot of investors, they have invested something, like you have a lot of these speculative online games, tools also that are there. At least they're not promising a return like your rummy.com or whatever, but these are actually investments that have come with a promise that they will pay you something back as a return, and they don't maintain adequate balance and so on. So defrauded investors of approximately so much, invoice discounting, etc. So again, what responsibilities do regulators have, like RBI or SEBI or whatever, in preventing such schemes? So ideally, if you are having a scheme which is promising something that is unbelievable kind of a return or very speculative in nature, are they answerable? Because all these Nidhi companies or chit funds are also coming under the ambit of RBI regulations in terms of publishing that scheme and ensuring that. So, what role could financial literacy and public awareness campaigns play? Of course, you see a lot of this public awareness that are coming these days. So, broadly, when it comes to a situation of fraud, if you are playing the role as an auditor or as a consultant, let us look beyond the transaction to see if there can be something that can go wrong. That is one of the principles. Even if you are working in the finance department of an organization, or if you are working in the organization also, is there a code of ethics that the organization has, and are we or are my colleagues following the code of ethics, code of conduct? If not, what is the methodology to report? So that is broadly 2 or 3 things that I wanted to mention. And I don't know how many of you know about some of the techniques that are used by the investigators. So one is going through the process, the internal controls, looking at transactions deeper, etc. There's also something called digital forensics, where you can, suppose I know that these 3 individuals are involved, I can image the computer as an organization, because those are the company's assets. I can image the computer, I can subject it to certain analytics using certain specialized softwares, where the softwares will also look for deleted files and so on. At the end of the day, you find something is going wrong, obviously you will have to confront that person with evidence, or do a recovery based only on evidence. So if you go and say that, okay, you have issued recruitment orders, etc., you're going to say, I am a loyal employee, my integrity is being questioned, you're casting baseless allegations on me. That's how the response would be, right? And he's not going to accept it. Nobody is going to say, yeah, sorry, I committed something and I will give back the money. You'll have to counter them with evidence. Where is the evidence? So digital forensics many a times gives you evidence, assuming that you find evidence. So I am an organization, the fraud is committed by a junior level employee or a manager or whoever, and I do digital forensics, I identify, I find out evidence. What next? What are the typical mechanisms that companies do, assuming that I found that you have committed a fraud? I can sack you, right? That is one option, easy option. Then I sack you, that's it. Warning. Is warning okay?
We had a case where one some companies warning.
Okay, you can. See, again, it depends on what messaging you want to give. See, on the one hand, if I say zero tolerance towards corruption, then I need to take strong measures. If I am okay I know that you have done it, you know it is wrong, but you don't realize it is a serious mistake, so I'm willing to give you a lease of life, I'll give you a warning. Okay. Suppose the amount involved is huge. So suppose somebody has defrauded the company of 20 lakhs, 30 lakhs. What is huge, I don't know. So let us say 20 lakhs is material. So suppose I know that you have committed fraud and you have stolen 20 lakhs from the company and I have evidence. What next? I'm asking what should the company, you are the CEO of the company, you know your employee has committed a fraud, 20 lakhs, you have evidence that that guy has committed a fraud of 20 lakhs. What will you do? What should the company do?
Recover and terminate. Recover and terminate.
How do we recover? On what basis do you recover? You show them the evidence, he will still deny. He will say, no, that's all fabricated. That the point comes to what he was saying on legal. So how do you recover? Or how do you ensure that, or like you are proving to me that I have taken, I am denying it still. So then next step is to go and lodge a formal complaint. With whom? With the police. You're willing to go to the police and lodge an FIR? Do many companies do it? Do they don't do it? Why? Why do they don't?
They know what their account is actually.
Correct. That is also there. Then that is not the only reason. Of course, that is one of the very good reasons. Then
I do not know about the rest of the country, at least in Tamil Nadu, nobody wishes to go to the police.
who is easier to deal with, a corrupt employee or the police? So, leaving aside that, see, there is a bigger issue on reputation, right? So, the moment I go to the police and say one of my employees has defrauded me, that shakes the image that the people have on me as the company. Can a TVS company go and lodge a complaint at the police station stating that my employee is, I'm just giving TVS as an example because you have a lot of faith on that organization, or you, Tatas or whoever, will they go? Will they? So if that is the case, but unless you go to the police or unless you make a formal claim, the chances of recovery also becomes very less. So it's a very tricky situation. If you go and lodge an FIR, that will also serve as a deterrent to people when in future people will think twice about committing such a thing. Suppose I let you out on a warning. The next step is second time you commit a fraud. It is not a material thing, but it is violating the code of conduct. I feel it is not tolerable. It is an issue that I cannot accept. I terminate you. You are terminated. You go and get another employment. That employer sends you a background verification letter. Many times what happens? Conduct good. How do you terminate? You don't terminate. You ask them to resign. If you ask them to resign, obviously you cannot, when a referral check comes, you cannot say, are you still doing the right thing? Is this not an ethical dilemma again? If I am taking action, I have terminated you, I should have the guts to say I am terminating you for violating company's ethical principles. How many organizations do that? Very difficult. See, again, tomorrow he can actually sue me stating that you are terminating me through unfair methods.
Ask for resignation, but if they get any letter from another company, definitely they will not give a call.
But most of them are giving.
Most companies actually give, even
They give good contact because when you are resigning, sir, then on the last day I am giving you a service certificate stating you have worked from this period to this period and you have left for better prospects. The moment I have given you that, then how can I give a bad reference when somebody is asking me? So it's a vicious circle again. So
they have a policy, I mean, like not a written one, but general practices. Either you give a good contact or you don't reply to that thing.
you cannot reply, fine. You don't want to spoil, we say, oh, I don't want to spoil somebody's life. Anga matra moral principles come suddenly when somebody has actually done something against the company.
More than the moral principles,
correct. So அதுதான் சொல்றேனே. So many times the ethical dilemma is throughout. When you find something is wrong, what do you do? When you have taken action also, we want to take the softer option because we don't want any consequences. Having identified and found evidence, we are very reluctant to go and lodge an FIR. There are cases, there are two ways to get evidence. One way is to do the digital forensics, very clear, is that permitted under Indian Evidence Act? There are guidelines on what is permissible. If it is a cyber crime, very difficult. If it is, at least there is a paper trail, there is some, this thing, okay, you chain of custody, all that is there, you can still prove that it is there. The other way is, suppose I know that you are getting a kickback from the company, from the vendor, and the vendor is not paying your primary account, he is paying your wife's account or somebody else's account, and I somehow manage to find out that the recruitment agency that is billing me is paying me 50% of the recruitment charges for a person who is directly applied on the website, and that is coming to somebody else. I know that there are ways and means to get the bank statement of that account also, but that bank statement that I get through some other means is not permissible as evidence. It can only serve as a methodology to counter this person, to call him and say, I have got proof that you have got money to these 4 accounts, these are the dates in which you got, these are the dates in which I have issued you have issued a contract to this person, the next week these guys have paid you, it's exactly 50% of the contract value or a round amount or whatever. Many a times they panic and accept, and they say, okay, but I have already spent the money, I can only pay you so much, என் லைஃபை ஸ்பாயில் பண்ணிடாதீங்க, என்னோட ரெப்புடேஷன் ஸ்பாயில் பண்ணி நான் கொடுத்துட்றேன் எப்படியாவது பைசா அப்படிமா, ஏதோ சம் அமௌண்ட் we recover, we also take necessary action, move on. But that is actually not permitted. The evidence that you have gathered is actually not permitted under Evidence Act. There are methodologies, there are other things that they say when you do an investigation. There is a book called Lie Spotting. Of course, you can't apply it at home, but there's a book called Lie Spotting on. There's a lot of behavioral forensics on how a person behaves when countered with truth, body language, adella irukku. Then the other thing is, if you are interviewing, if you are countering a woman, ensure that you also have a women employee when you are countering. That is also something that are in principles of investigations, because again that may again lead to a posh issue later, so that you are harassing a lady unnecessarily, and that will go into another spin, which again will have to be taken care of. So there are a lot of dimensions. So handling an investigation is not easy, and after having identified something has gone wrong, how do we address it is also not easy. But that is where our moral antenna comes into picture on how what is acceptable behavior, because at the end of the day you want to go and sleep peacefully. Know that something has gone wrong, you have not done anything about it, if you still go and sleep peacefully, that also reflects on how it is. So I'll stop with this. That's all that I had. So any questions I'm happy to take, otherwise we can close the session. So, but it's a very realistic situations that you see in most organizations. It's not that frauds are not happening any longer, or see, there are, the moment you scratch the surface a little bit more than what you are expected to do, either as a finance professional or as an auditor, you're obviously finding a lot. Many cases the consultants are, as auditors or consultants, our own fraternity is also advising on, when we talk about tax planning, right, where do you push the boundary to, right? What is tax avoidance, what is tax planning? We have all studied it, right? Till what is permitted, what is not. So there's a very thin line, and that is where ethical values play a very important role. Okay, thanks a lot. Thank you.